trading houses are in focus today following news that Warren Buffett, the chairman and CEO of Berkshire Hathaway, of course, has upped his stakes in Japan's 5 largest trading houses.
After nearly 40 years of deflation, Japan's inflation hit a 41-year high in February 23 as the country's economic recovery progressed under the influence of pro-business fiscal and monetary policies, as well as a boom in travel. Rapid price increases are generally unfavorable, but Japan is an exception. After years of deflation since the late 1980s, the world's third largest economy is at a turning point. So what are the various reasons that led to this event? Rising energy prices. The war in Ukraine has caused a sharp increase in global energy prices, particularly for oil and natural gas. Supply chain disruptions. The war and the ongoing COVID-19 crisis have caused significant disruptions to global supply chains. This has made it expensive for Japanese businesses to obtain the raw materials, leading to higher prices for consumers. Rising wages. Wages in Japan have been rising in recent months as people compete for workers in a tight labor market. And this will contribute to inflation as businesses are going to pass on these high labor costs to consumers. And government stimulus. The Japanese government has been implementing various stimulus measures to support the economy, including direct cash handouts to households and subsidies for businesses, which has also contributed to inflation by increasing demand for goods and services. So while this inflation has not definitely arrived through its ideal route, it still has a positive spin to it. More than anything, Japan has now evolved into the next big investment destination because of it. Veteran investor Warren Buffett invested $6 billion to acquire 5% stakes in Japan's 5 largest trading companies, namely Itochu Corp, Marubeni Corp, Mitsubishi Corp, Mitsui Corp, and Sumitomo Corp in 2020. These 5 companies are known as the Sogo Shosha. It's a term used to describe Japanese general trading companies that play a major role in the Japanese economy. For quite some time, these companies have been facing a lot of criticism due to various reasons like their size and dominance that led to monopoly and unfair competition, opaque business practices, close ties with the government to advance their own interests, etc. In addition to these general criticisms, they have also been under scrutiny for their role in the Japanese bubble economy of the 1980s, as they borrowed heavily to invest in a wide range of assets, which is clearly visible from this chart that shows that the total debt of large corporations grew by 65%, whereas their profits increased by only 35%. So these corporations were taking on more debt to invest in assets, which drove up the asset bubble, and when that bubble burst, they were the ones left with this mountain of debt. Secondly, these companies have also been involved in various corruption scandals in the overseas markets. Despite all these criticisms, Warren Buffett found an appeal in the diversified operations. These trading houses offer high dividend yields and have strong free cash flows. Inflation in Japan has been relatively low for many years, but it has picked up in recent months due to a combination of factors, including the rising cost of energy and food, the global supply chain disruptions, and the government's own stimulus measures. This inflation is largely imported by the global crisis, which means it is caused by factors outside of the country's control. It suggests that the government may have limited options to address this problem. Some economists argue that inflation can be beneficial to the economy if it is moderate and stable. It can boost economic growth by encouraging consumers to spend more money now than later, and also help reduce the burden of debt on businesses and households. However, high inflation can also be harmful to the economy. It can erode the purchasing power of consumers and businesses and can lead to uncertainty and instability. Japanese government has been hesitant to take aggressive action to address this inflation, fearing it could derail the country's fragile economic state. However, if inflation continues to rise, the government may be forced to tighten monetary policy or raise taxes. That's all from our side. Do hit that subscribe button to stay tuned with our upcoming videos, in which we'll be exploring how this Japanese inflation is actually going to bring about a major shift in the entire world economic order.